Hello everyone. So this is the continuation of what I have discussed to you about partnership dissolution with regards to the lump sum liquidation. For this one, we will have a different case of preparing our statement of liquidation. So this is about capital deficiency and the right of offset. For this one, our assumption here is the loss on realization results in capital deficiency for a partner with a loan balance, and then we will apply the right of offset. So what is statement of liquidation? So this is a statement that summarizes the sale of non-cash assets, the distribution of gain or loss, the payment of liabilities, the payment of loans to partners, and final distribution of cash to the partners in their capital balances for a given period. What is the importance of preparing our statement of liquidation? So this is prepared to show the progress of the liquidation over a period of time. Now, there will be an inserted process in the 5 steps that I have discussed in the first presentation that we've had. Or in step number 2, when the distribution of loss to partners result to capital deficiency, the deficient partner who has a loan to the partnership may exercise the right of offset. So what is right of offset? So the right of offset is a right given to a partner who has a loan to the partnership to apply it against his capital deficiency. In the previous video that we've had, I have discussed there that a partnership can lend money to a partnership in case there is a need to borrow. So for this one, with the liquidation process, the partner who becomes a deficient partner but there is a loan payable to that partner will apply the right of offset. So who is a deficient partner? A deficient partner is one whose capital balance is not enough to absorb the loss on realization. So we will have an example later on in this video presentation. So for this one, we have used the same data in the first video that we've had about the Rolls and Royce merchandising. So the profit and loss ratio is still the same with 25%, 30%, and 45% for the 3 partners, Ray, Roy, and Rolly. Our assumption here is we have sold our non-cash assets amounting to 400,000, but we only sold it for 200,000, which is less than the book value of the non-cash assets. So with this one, we will have a loss on realization amounting to 200,000. So we are going to prepare our statement of liquidation. So the same process, we have recorded or stated the balances before the liquidation based on the balance sheet or statement of financial position in the previous slide. And then the first step is to sell the non-cash assets for amounting to 200,000. So the loss is 200,000, the loss on realization, and then we are going to distribute the loss on realization based on their profit and loss ratio. So the computation as shown here is 200,000 times the profit and loss ratio of Ray of 25,000, 30% for Roy, and 45% for Rolly, amounting to 50,000, 60,000, and 90,000 respectively. So as you noticed here, there is a negative balance of 10,000 because the balance of Ray Capital account is only 40,000, wherein the loss on realization is 50,000. For this one, we will apply, or this is the capital deficiency amounting to 10,000. We will apply the right of offset. So Ray, or the partnership, has a loan payable to Ray amounting to 20,000, and his only capital deficiency is 10,000. We will apply the right of offset for this one, and then there will be a remaining amount for the loan payable to Ray of 10,000. So there is a zero balance on the Ray capital balances. So this is the inserted step in the liquidation process. So after we have done the right of offset, we will proceed to paying our outside creditors, which is represented by your accounts payable. So 250,000 minus the 200,000, we still have a cash balance of 50,000, and then we have paid our accounts payable. So the remaining amount to be paid are the loans payable to Ray and the loans payable to Rolly, amounting to 40,000. This is 10,000 plus 30,000. So we have paid it using our cash balance, and there is a remaining amount of 10,000. The last step is the same. If there is a remaining balance or cash balance, we'll need to distribute it to the partners depending on their capital balances. For this one, only Rolly has a capital balance of 10,000, which we have given it to Rolly. So here is the journal entries, or here are the journal entries. For the first one, still following the first step in preparing our statement of liquidation, which is we debited cash and loss on realization amounting to 200,000, and then we credited non-cash assets amounting to 400,000. The second step is the distribution of loss to the partners, 50, 60, and 90,000. The loss on realization is on the credit side amounting to 200,000. So the inserted process here is the right of offset, wherein we debited loan payable to Ray amounting to 10,000, and then we credited Ray capital amounting to 10,000. So after we have settled the right of offset, we will proceed to paying our outside creditors. So we have debited accounts payable, and then we credited cash amounting to 200,000. The fifth step here is to pay the loan payable to the partners, Ray and Rolly, 10,000 for Ray and 30,000 for Rolly on the debit side, and then we credited cash amounting to 40,000. There is still a remaining cash of 10,000, which we have given to Rolly because Rolly is the remaining partner who has a capital balance amounting to 10,000. There are still different cases when it comes to preparing our statement of liquidation, which you'll need to read further through Google's and then try to get the right information.